and welcome back to the podcast. I'm Victoria Clark, Head of Lending at the Right Mortgage Network. Thank you for joining me here again today for another episode on the Right Mortgage Network podcast series, The Lending Insights. Today on the Lending Insights podcast, we're joined by Charlie Stack, Corporate Account Manager for the Mortgage Lender and Bluestone Mortgages. Charlie, welcome to the podcast and thank you for being on with us today.
Well, thank you very much for having me.
Right, so we are at that time of year now where we begin to reflect on the previous year and start to plan for the year ahead, the big 2026. 2025 has been a very fast-paced year. There has been so much diversity and activity going on from advisors in our market. You can really see how hard brokers are working in order to support their customers who are coming across the desk at their various quirks each day. The Right Mortgage Network is up 32% in completed lending this year. Quick plug for congratulations for our members for this because it's really, really positive, not only because of how much hard work is going in, but with the demographic of customers changing, this means not only are they helping more people, they're working harder and able to make sure that they're doing so. So great work from everybody. But with all of this in mind, lenders like the Mortgage Lender and Bluestone, who individually are so geared up for the change in customer profile and supporting unique customer types, all now under the Shawbrook banner. Next year will be an exciting one to see how much more can be done. With it being a busy year for us all, it has been a particularly busy year for the Mortgage Lender and Bluestone, then hasn't it, Charlie? We'd love to get to know more about what is going on behind the scenes. Please tell us what's been happening.
Absolutely. As you say, there's been a huge amount of change over the past couple of years at TML and Bluestone. I've been in the industry now at TML for just over 8 years, and I don't think there's actually been a normal year yet since I've been at the Mortgage Lender. But most notably, at the start of this year, both lots of staff from TML and Bluestone, we TUPE'd across, so we're now official employees of Shawbrook Bank, who have now, of course, own and fund both of our brands. We've centralised most of the operational side of the business along with the sales teams. Therefore, we have dual branded members of staff who represent both the Mortgage Lender and Bluestone. We've got a field sales team who's headed up by Chris Kirby. He manages all of our BDMs who are out on the road, seeing all of their brokers in their individual areas. We've got David Eves, who manages both of our telesales teams, one of which is based in Glasgow, who deal with all the TML side of the business. And then the other one is in Sheffield, who manage all the Bluestone side of the business. And then obviously we've got Louise Apollonio, who has recently been promoted to Sales and Distribution Director, who is the person who I directly report into. In terms of product development, we've increased our LTVs across both brands. We've also launched into different schemes such as shared ownership, right to buy, deposit unlock, all of which I'd say are big bits of criteria where essentially we're able to help more people achieve their home buying aspirations. We're also looking at developing processes to make it a lot easier to use both the Mortgage Lender and Bluestone. A recent article that actually got signed off this morning, so hot off the press. At TML, we can EID your client at DIP stage now, so no physical ID needs to be provided. We run an automated income verification, therefore we don't need pay slips. We don't ask for bank statements, and we also run AVMs up to 75% loan to value. We also send the client a direct debit mandate and the declaration that they can then DocuSign back to us. So using all of the above, we actually were able to help quite a complex customer with multiple income streams along with adverse credit go from app to offer in just 5 days. Of course, not every case is going to pass all of the AVMs and auto income altogether, but it just shows that, when everything clicks together, we can work extremely efficiently with all the changes that we've made this year.
That's so exciting, but it makes your job a lot easier anyway.
Absolutely. And the underwriters, and the big thing I would say is the biggest bit of advice for brokers is only give us what we ask for. We have a bespoke checklist that we send over for every single case, and the amount of times a broker may upload something that we haven't asked for, the underwriters then need to look at that. Just don't give it us. Only give us what we ask for, and the case will go through a lot quicker.
No, that's a good tip. Thank you for that. But it's really exciting that you've got all these different developments going on. I'm sure then just with having Shawbrook support all of that, it just means there's so much more to come. That's already so many fast things that it helps all the brokers all the time. But you have the two lenders who work in the specialist space, as you've already said. Firstly, focusing on the residential side of lending that covers both the brands. Where do you see the opportunity for brokers to utilise a lender such as yourselves?
Very good question. And I actually read in Mortgage Strategy all around self-employed that it's forecast to grow from, I think it was just under £21 billion in 2023, all the way up to just shy of 35 billion by 2029, which is a huge 67% increase. That growth is driven by, first of all, the rise in number of self-employed individuals, but also lenders such as TML and Bluestone and every other specialist lender in the market who are looking to grow our overall share of business, not necessarily stealing it from each other, but essentially saying yes to more clients, therefore growing the overall sector as a whole. Some high street lenders don't necessarily have as bespoke lending criteria as some of the lenders in the space due to sometimes complexity or irregularity of income, whether it's dividends, pre-tax profit, or maybe even just a huge jump in the latest year's figures. If we actually delve into the specialist mortgage market, which includes the self-employed, impaired credit, and non-standard applicants, that's expected to grow from £32 billion to £54 billion by 2029, which is a 70% growth. So again, really highlighting the scale of the opportunity for lenders in the specialist space like TML and Bluestone. Now, we at Shawbrook actually released our Home Alone report recently, which we are starting to send out to our corporate accounts, just in almost little segments, just to show the research that we've done. And that does highlight there is, however, a little bit of a worrying trend, but also an opportunity, which is the growing reliance on unsecured credit and uptick in missed payments, highlighting a rise in the number of customers with adverse credit. 38% of adults that we surveyed have missed at least one bill payment in the past 12 months, up sharply from 24% last year. And of those who missed a payment, 51% of those are full-time workers, compared to 21% who are self-employed, showing that almost your working status doesn't necessarily equate to
No,
financial
you wouldn't
stability.
have thought it'd be that way around, would you?
Exactly. So it's very interesting. We then go on to mortgage defaults, which remain at just 5% missed, defaults are at 5%, likely due to prioritising their mortgage payments. But the sharp rise in the missed payments across other areas signals maybe a little bit of consumer strain. Repeat missed payments are becoming more common as well, with 20% missing bills more than twice in the past year, and 14% of those then going on to default on that bill. So if we look at those who've been turned down for a mortgage for whatever reason, whether it's self-employed or adverse, the most common reason was a poor credit score. That was cited in 35% of the cases across our report. But credit scores do only play sort of part of the story. They also cited volatile income at 26%, missed payments at 21%, and then even unaffordability at 21%. So for applicants in less traditional professions, the barriers can be even higher. 16% of those declined borrowers were turned away due to just their job type, a figure that rises to 28% if they're self-employed. So these findings are sort of really highlighting how traditional affordability assessments are maybe failing to keep at pace with the realities of maybe some of that irregular income and different types of work. So overall, everything I've mentioned really is just highlighting the importance of the specialist lending market.
Yeah, and getting to know your customer properly. And I think like having lenders like yourselves out there when there are customers like this becoming more and more common, it's just advisors getting to know that, it's not no, like let's look at other options that are available. So it's really good to know, isn't it, how common it is to happen that there is solutions available for those people. But yes, so you did mention a lot, obviously, throughout all of this that you are that all the processes and staff are now dual branded across both TML and Bluestone. How would you differentiate the two lenders, and like how do you go about saying the two when you're talking to people? What would a broker use TML for, and what would they use Bluestone for?
So, as we say, all the sales team, except a few of our key account managers, are now dual branded. In terms of retail mortgages as a whole, which is TML and Bluestone, we actually view TML and Bluestone as two propositions now, rather than two separate lenders. It's just two of our propositions. TML on the one side, which we can help with. Obviously, we're quite a strong buy-to-let lender. We help with everything in terms of limited company, HMOs, MUBs, expats, holiday lets, etc. However, on the TML side, we can also help with the residential side of things. A wide variety of scenarios. However, linking into all the self-employed stuff I just spoke about, I would say TML have probably got one of the strongest self-employed propositions in the market. And the reason for that being, we'll do 1 year's accounts up to 90% loan to value. Limited company directors will use pre-tax profit plus salary, which is really maximising the loan size, really maximising the income to get that biggest loan size possible. That might not be possible elsewhere. And on top of that, if they have been trading 2 or more years, we'll always use those latest year's figures, even if there has been a large jump in income. Now, we do allow adverse credit on TML, but it's not as heavy as we do on the Bluestone offering. So that's where I'd say is the biggest gap. So at Bluestone, we still do offer contractors self-employed, etc. But when it comes to adverse credit, maybe an applicant's had a life event which has resulted in quite a substantial amount of adverse credit. Maybe it's been registered all at once. Maybe it's over a 3, 4 year period. This is where the Bluestone side, we can really help with those clients. We can allow up to 4 applicants on an application. Therefore, we're using 4 lots of income, but we also allow adverse per applicant as well. So therefore, if there is a substantial amount of CCJs, defaults, missed payments, Bluestone is definitely a lender that can help those brokers place those cases for those customers. Not only that, one of the biggest bit of unsung bits of criteria that I want to shout about, as I truly believe it could help lots of customers, is our delayed completion criteria. So what that is essentially is we will allow an application to be placed now, even if the adverse currently doesn't fit our criteria. We can then condition the offer so that when the adverse does fit policy, that's when it can go on to complete. So where this really helps is, a customer's gone out, they found their dream home, they've gone to a broker and the broker's maybe tried one lender, tried 2 lenders. You'll have to come back to us in a couple of months, by which time that property could have gone. Someone else could have gone in and put in a higher offer and you've lost it. At Bluestone, we could still help them secure that house, condition the offer that you're going to be able to get it in I don't know, say the adverse drops off in the next 4, 5, 6 months, we'd be able to condition the offer for that.
Well, there's already so much that's being done to help customers, and that is such a niche scenario. Like, that's so good to be. I'm sure lots of advisors listening would think of somebody where they could have helped if they knew about that as a solution to
Absolutely.
it. But obviously, I'm sure a lot of them do. But the more we can spread the message about helping that, it's so good. And it's so exciting with all these different things you've had that you've got going on already and the way how it's shaping up for next year. But what can we expect even more than from the group over the next 6 to 12 months?
We'll have to wait and see. But I think as we look ahead for the next 12 months, I think both brands are set to deliver lots of advancements that will enhance the experience for brokers and for the customer. So while we can't share all the finite details, and I'm being very cryptic here, there are some exciting
Dangling
developments.
the carrot of
I,
excitement for
I know.
everybody.
Well, I'll get told off if I drop them in. But there's a lot of exciting developments underway that almost reflect our commitment, not just to being an innovative product offering, but also to make the brokers' lives easier when using a specialist lender. Referring back to the AVMs, the Cato, all of that stuff, the automated income verification, all of that stuff is making brokers' lives easier. One of the biggest areas is always product development. We're listening closely to broker feedback, market trends, just to try and refine our offering and introduce new solutions. Whether it's improving flexibility, expanding on current criteria that we've already got, or even just simplifying a process. A big driver of us making some of our enhancements is going to be AI. I think AI has long gone being just a buzzword. It has become, an extremely useful tool that even I use on a day-to-day basis. It's helping us almost streamline the journey for brokers and customers. Who knows where AI is going to go and where it's going to take the industry as a whole over the next couple of years? But I think we can almost see a world where case updates could be instant with specialist lenders, depending on the case. Some document handling could again definitely be automated. Underwriting decisions could be faster without almost losing that human touch. So I think with all that, that means brokers I don't know, they spend less time chasing updates, they're more time focused on advising their clients. For customers, it's a smoother and more transparent experience with a specialist lender because, again, with a lender that's called TML or Bluestone, sometimes the general public, if you speak to them, who's my mortgage with, and you say the mortgage lender or Bluestone, they don't know who that is. A normal consumer has only heard of, the big banks that they walk past on the high street. So, but ultimately, our focus is providing brokers proper solutions for their customers and supporting their customer by achieving their home ownership goals. We're not just adding features on products for the sake of it. We're looking to build a real solution that solves the real problems and create some real value for those brokers and the clients.
Lovely. That all sounds so good. And thank you so much for going through all those different things and really the unique things that you guys can do. But before you leave us, please tell our listeners what is the best way for everyone to find out more about the brands and how you can help them.
I'd say get registered. That is the biggest bit of advice I could give in terms of getting to know more about us on both brands, that is. So we have got a landing page now that you can use, which takes you to sort of a find your BDM page who represent both brands. Not only are you then registered, ready to submit a case if it does come across your desk. But you do also receive our marketing emails. Now, our marketing emails, we don't bombard you with products and criteria and rates all day, every day. But what it does do, it will let you know about a new product. It will let you know thought leadership pieces, market insights, such as the Home Alone report that we launched that we're sending out in segments. Brokers can also visit the individual websites, put in their postcode and find out who their local field BDM is, along with their remote BDM as well. So if anyone listening to this wants to find out a bit more, please reach out to your local BDM and visit the websites. Thank you very much.
Lovely. Charlie, thank you. It's been a pleasure to have you on with us today and give an insight of what's been going on your side. Thank you very much for joining us. Thank
Thank
you
you
as
very much
always
for
to
having
our
me.
list. Thank you. Thank you as always to our listeners. We appreciate all of the feedback on the podcast. Keep following along for more still to come for this year as well. I've been your host for the Lending Insights podcast today, Victoria Clark, with our guest Charlie Stack. Thank you and see you next time.